It's been a rocky ride for investors in SoundHound AI, NASDAQ SOUN this year. Shares of the voice recognition technology company have plummeted more than 50% year to date, a dramatic drop that may give potential investors pause. However, take a step back and the picture looks quite different. Over the past 12 months, SoundHound's stock is actually up over 100%. This sharp decline may simply be a reset in the company's valuation after a major run-up. With significant sales growth projected in the near future and a long-term tailwind from the booming voice AI market, some investors are now wondering, is this a golden opportunity to buy SoundHound at a discount? Rapid growth in a high-potential market. The voice AI industry is gaining serious momentum, with analysts projecting it could reach a market value of over $40 billion by 2032. SoundHound, while still a relatively small player, is strategically positioned in this space. Though its research and development spending, about $70 million annually, pales in comparison to giants like Meta, which spends upwards of $40 billion a year, SoundHound's focused approach has helped it carve out a niche. The company has secured high-profile customers such as Applebee's, Qualcomm, and White Castle. These partnerships allow SoundHound to test and refine its technology across various industries, from fast food to automotive in-vehicle assistance. Despite the recent stock dip, SoundHound's business fundamentals remain strong. In fact, growth forecasts have surged, with analysts now predicting nearly 100% year-over-year revenue growth, a significant leap from last year's 30% projection. A pricey bet, but with potential. Even after its steep drop, SoundHound stock is not cheap. Its price-to-sales (PS) ratio has come down from an eye-watering 100x to around 37x, still high by most standards. For comparison, most tech growth stocks trade at significantly lower multiples. However, long-term investors may still find value. If SoundHound captures just 10% of the voice AI market by 2032, that could equate to $4 billion in annual sales, roughly equal to its current market cap. That would mean the stock is trading at just 1 times future sales, a compelling valuation if the company executes on its vision. Bottom line, buy the dip or stay away. Investing in SoundHound today means accepting a high degree of uncertainty and a premium valuation. But for those willing to think long-term and bet on the rise of voice AI, this recent correction could be a smart entry point. Still, it's important to weigh the risks carefully. As with any emerging tech stock, the path forward is far from guaranteed, but with strong sales momentum and a focused strategy, SoundHound may be one of the more intriguing players to watch in the AI space. Would you like a visual chart comparing SoundHound's valuation versus its competitors?